In this video, I'm going to give a quick update on the S&P 500, a trade idea in CAT, the US dollar, EURUSD, and Bitcoin. Real quick, before we get into the update, I forgot to mention in the last video, I'm actually traveling through mid-August. So I wasn't planning on doing any videos until that time. So this is going to be a very quick one. But what I will try to do is post some updates in the community tab. I put one in on Tuesday, and we're going to kind of walk through this, and I'm going to show how this all kind of relates to today's update. I'm recording this on Sunday the 14th. In the United States, it's probably still Saturday, but you can see I posted this 5 days ago. So this was Tuesday morning my time, Monday evening in the US. And we're going to skip down to here. Currently, it appears that the NDX 2-month cycle came in right on time, and I'll show that in a minute, suggesting more upside to come in the NASDAQ and therefore the S&P 500. And using that, I also adjusted the cycles for the S&P 500 to also be coming in right on time. Moving on, the dollar appears to be far weaker than expected despite the recent 5-month trough. I'm expecting to see the euro and GBP potentially explode higher against the dollar over the coming weeks and months. Both pairs put in 2-month cycle troughs against the dollar in the last week of June. I'm expecting the euro to outpace the GBP over the coming months, so the EURUSD is my preferred pair for day trades. However, both EURUSD and GBPUSD likely topped or are very close to a top in the short term, with the next 2-week trough expected around the end of this week. And we're going to look at those charts and see exactly what I was talking about and how that played out. First, this is the daily chart for the NASDAQ E-mini futures, and you can see we have broken out of this long-term modified median line shift. The upper warning line is blue. It had previously acted as resistance. I had been expecting that to act as resistance again, but we broke out, back tested it, and continued higher. And when we back tested it, it was around the expected 2-month cycle trough. And so I have a new 2-month cycle here, and these are 2-week cycles in orange, and we are putting in a higher trough now. Until we roll over and break below one of these 2-week cycle trough lows, I'm expecting further upside. At this point, we'll probably move towards the upper warning line of this other long-term standard median line set, which gives us the upper warning line in yellow. This is the E-mini futures daily chart, and so the same is true here. While I was expecting a larger pullback, as I've discussed in prior videos, we got a very minimal pullback. Now, that can mean a few different things. That can mean either extreme bullishness, and we should continue to expect a lot of upside, or sometimes we get a quick pop early in the cycle and then it rolls over. The next 2-week cycle trough is expected early this week, so this is not unexpected to see it starting to slow down. We'll see where we get a trough around Monday to Wednesday would be the normal expectation. It can go beyond that, or it could have potentially come in on Friday. That would be a little early, but regardless, wherever that trough does come in, we will just mark that low. We'll move a new cycle over, and then once we take out that low, that is when we would start to expect some further correction. But considering we now have a much longer time frame here with a recent trough, we would not necessarily expect it to roll over so soon. So I'm looking for trades to the upside, which leads me to CAT. This is the CAT daily chart, and I just put on a long trade here, and I'm going to explain why. So we are looking at long-term cycles here in pink, which are roughly 225 days. Shorter-term cycles in blue, which are roughly 83 days. And then even shorter term cycles in orange, which are about 25 days. And we've been expecting a trough of this longer term pink cycle, as well as the trough of the shorter term blue cycle, which would help us confirm the longer term trough. And so when I zoom in, what we can see here is I actually don't have the most recent blue cycle at a clear trough. Perhaps it's over here. I originally had it over here, which would have suggested potential downside moving on into the next orange cycle. But what happens sometimes is, because these are just averages, sometimes when there is no clear trough, we get the next trough around what would be the average for 2 of those cycles. And I'm quite confident that trough has come in because on an even lower cycle, the orange cycle, we just put in a higher trough. And not only did we put in a higher trough on this cycle, which suggests the longer term cycle trough is in, which is blue, which would then suggest very likely that the longer term cycle trough in pink is in, but using a modified shift median line set, so blue, red, blue, we go the original trough of the long-term pink cycle to the high of that cycle to the expected low. And then where did the orange cycle trough come in? What I believe to be the first orange cycle trough of the longer-term pink cycle, well, that trough came in right at the lower warning line. So I did not go long on Wednesday, but I opened a bunch of longs on Thursday. There are a few trades per year that I really hammer. I go a bit more aggressive than I do on other trades. This is one of them, and I'm going to explain why right now. So I don't have the orange cycles in this pink cycle here, but remember, they're about 25 days. So that's short at 17, 24 days. Now, even if you did not catch that trough, you see that big bullish candle there, which would suggest that a new cycle of some kind, in this case the orange cycle, has begun. So this would be the first trough of the first orange cycle in the pink cycle. So then if we measure from the next day where you could have opened it to the peak, to the first peak, 21 days, it moved $50. You could have gone even longer term looking for this longer term median line set, and ultimately it moved $73, $74 in about 95 days. If we go to the next cycle, here we have the first higher trough, higher orange cycle trough. Now this one came in late, and even if you did not hit that perfectly, right, if you waited and you bought on the gap up and then you measure, you moved $34 in 14 days. And then the next longer, again, targeting the median line here, would be $77, $78 in about 60 days. Let's go to the next cycle. Here we are in the next cycle trough. And how would you be able to time this or buy this? You're not going to buy the gap down. You could. A gap down is a good sign that there's exhaustion when it's at an expected trough. But if you waited and you saw that big bullish candle after the gap down and you buy the next day, and then we can measure, and we go out about 26 days, you're up $50. You go further out to that median line again, $80 in about 73 days. And so now here we are. Again, I did not buy on this candle on Wednesday, but once we gapped up the next day after putting in that nice long wick and held the lower warning line, that's when I went long. And I kind of went embarrassingly long here. I have a number of short-term and long-term positions here. Now this median line is far away, but I do think there is a strong possibility we achieve that at some point in the future. I've zoomed back in here a bit just to show the benefits of these cycles and these median lines. Even though I did not get in at the median line, I got up here. The downside, now it's a bit different with options, but the downside here is 2.63% to the upside. And again, this target is moving up. We're looking for something around 15%. And if you look at the dollar amount, $50, this is actually a lot less than some of the other moves, which were around $80. They were in the upper 70s range by the time they hit the upper warning line. And so again, I have some short-term options. I sold a lot of puts. I sold some short-term puts and some long-term puts, and then bought call spreads, both short-term and long-term, pretty far out of the money. At least the long-term ones are far out of the money, allowing for a significant potential risk to reward. But I believe these to be very high probability trades based on the time cycles and the median line. And so this is just a perfect example of how I like to use these in combination with each other. If you like the video so far, be sure to hit the like button and subscribe for more content. Okay, so in recent videos, I've been talking about the expected strength in the US dollar and how I really wanted to hammer longs in the US dollar. But on that update I posted on Tuesday, I discussed how I've kind of changed my mind on that. And so if we look at the US dollar chart and we go to Tuesday, this was actually an up day. So how did I know, or why did I change my mind? and decide that the dollar is actually starting to look very bearish? There are a couple of reasons. One is we took out the prior 2-week cycle low. Now that can happen if we're correcting a longer term cycle, which in this case would be the 1-month cycle. But if you've been watching these videos for a while, you know I don't particularly put a lot of faith in these 1-month long cycles. The other reason is if you look at individual pairs. So if we just look at the USDCAD really quickly, this has really been struggling to move to the upside, even though I believe the much longer term trough here in pink has already come in. Early in a cycle like this, you should be seeing a lot of bullishness, and it has just not materialized. Additionally, if we look at the USDCHF, if you've been watching for a while, you know I thought originally the trough was here, and then I got stopped out. And we watched it come in later, and I discussed how, okay, this is normal because of this 1-month long cycle. It just came in a cycle late, but it's been finding resistance at the same upper warning line where it found resistance before. And you would expect a little bit of resistance, sure, but it should consolidate right underneath that and then ultimately break out. And it has just been rejecting and rejecting. And so this was Tuesday the 9th when I posted that update, and we had pulled back pretty strong. And we still, as far as timing goes, we're expecting more downside to come, which suggested to me we were going to take out this low, which ultimately we did. It did put in a big wick and is kind of holding this lower warning line, but ultimately we should just not be finding this level of resistance at this upper warning line. We've tried over here, we grinded along it for a while, we tried to break out here, and then it ultimately failed. It came up towards it again, and now it appears to be failing again. All while, despite the possibility of having further downside, we have already taken out, I'll take the drawing tools off, we have already basically double bottomed, and I'm expecting us to take out this 2-week cycle trough just like we did in the dollar chart. This is the EURUSD chart, and this is the additional support as to why I thought the dollar would ultimately roll over, and we'll find a lot of strength in EURUSD and really any pairs against the EURUSD, because while I was expecting a trough here, and originally or prior to the move out here, I thought we would ultimately put in a lower high and then move further down into this longer term cycle as we moved up in the dollar. But what happened is we got a really strong bounce, and then we did what I expected on the US dollar charts, where we started consolidating right below the resistance point. Now, we had done this previously in a bit of a different manner and ultimately failed. This was just looking a lot stronger as we hit it once, hit it again, had our down day. This was Tuesday, and I knew based on the 2-week cycles, we were expecting a 2-week cycle trough. I was expecting it around the end of the week. It had actually troughed, I believe, on Tuesday. And so I had mentioned in that update, I thought the short-term top was in, and I was looking for a bottom later in the week. The top was in, the bottom was actually already in by the time I posted that as well, or maybe a couple hours after I posted that. And we did indeed get our strong move after our consolidation right under resistance. And this is extremely important resistance, because if we zoom out, I'm actually going to go to the weekly chart here. This is a long-term median line set, which we have actually hit once, hit twice, hit a third time, hit a fourth time, and now we're finally breaking through it. And again, going back to the idea that, yeah, after you put in these bottoms based on these median line sets, when you break out of them, it's rare for you to just slice right through them. You often consolidate underneath them before you break out through them. This is kind of what I was looking for in those US dollar pairs that we did not get. We continue to get failures, which continued to make new lows. But on the weekly chart here, while we did have a failure and multiple failures after that, we've not taken out this low over here, this other long-term low. We've just been continuing to consolidate, and now we are breaking out. And if we take the drawings off for a moment, on the weekly chart, we're almost above this other weekly high over here from June. And once we do that, that will really confirm that we're breaking out. But I already feel like we are there, as we have 2 daily closes above it, and the second one was very strong. And so while I did manage to trade off this bottom, I actually took profit here expecting a larger pullback. So unfortunately, I did not get another swing trade in here. I do have a day trade that's open right now. It's working out pretty well. It's already free, as I've taken half off at 2-to-1, and then I have a longer target as well. But I'm expecting this to continue to move up, at least to this upper warning line. We might not go straight there. We might consolidate, and actually if we zoom out a bit, what I'd like to see is we actually get up to this upper warning line, maybe even this median line here, and then ultimately break out of this other median line. And then when we correct in the longer term here, if we can just kind of back test this median line set here, that's going to show that there's a lot more bullishness to come, which means back to the US dollar chart, and we're going to zoom out into the long term, which also means this very long term, you can see it's in maroon down here. This cycle is rolling over early, which means there's going to be a lot of bearishness in the US dollar. And in fact, let's zoom in for a moment. As soon as we take out this trough right here, which we're very close to, that is going to suggest the high for this cycle is in. It's over here, which means there's going to be a lot of bearishness. And if we go to the weekly chart, there is a long-term median line here, which is very relevant. We've bounced off of it a few times before ultimately putting in this high, and I think we might be heading back down to that median line. This is in August of 2026. So this is a very long-term time cycle, and it appears to be rolling over and becoming very bearish pretty quickly, which leads to Bitcoin. If the dollar is very bearish, this is the Bitcoin daily chart. I just had to hit the log button. I talked about that in the last video. Oh, I'm sorry, this is the weekly chart, but let's go to the daily chart. You can see we've achieved the lower warning line of this corrective median line set. It is corrective because it is the high of the prior pink cycle here, the low, and then the high of the current pink cycle here. And it appears the trough might be coming in a cycle early. And by a cycle early, I mean an orange cycle early, which the orange cycles are about 45 days. We'll know this trough is in if we put in a higher 45-day cycle trough expected sometime in mid-August. It could come later than that, as the next 2-month cycle trough in the S&P is now due around the end of August. So if we get a higher orange cycle trough there, that's going to suggest this trough is in, which, if you're looking further down, would suggest this trough is in. This trough could be in over here, but I think this looks like more of a longer term correction than this does. And that would suggest then we should see a lot of bullishness as we have a much longer term cycle turning up. And I think that will give us the blow off top, which will probably come to this upper warning line, which is around 100K, a little more than that. And I am expecting the peak for the SP 500 as well as for Bitcoin to come in right around the election. So if we go to November, this is November 8th. This is 105K. We definitely could get a blow off top. Actually, in I think all of the prior cycles, Bitcoin has overthrown the upper warning line of the median line sets. So I wouldn't be surprised if it overthrew that, and that would also give us the ability to potentially reach this median line. And so if we go back out to November, that's around 120K. So once this troughs here, I am expecting this to Bitcoin to pretty much double, to pretty much go to somewhere in the range of 100 to 125K. As always, thank you for watching this video, and be sure to subscribe for more.